Welcome to the Micromobility Podcast. I'm Prabin Joel Jones, your host. And today we have James, who's a founder, CEO of Bike Club. So before we get into the session, a quick announcement. We recently announced Micromobility Europe. This time we are bringing the event to Berlin, which is where we had one of the largest events in Europe, our first event in 2019. And we expect this event to be much larger than the Brussels edition that we had. If you haven't got your tickets yet, go to micromobility.io and get your tickets, and see you all in Berlin. So with that, hi, James. Welcome to the podcast.
Hey, Prabin. Thank you very much for having me. Really looking forward to this.
Great. So for folks who don't know you and your company, can you give a quick intro?
Yeah, so I'm James Symes. I'm the CEO and founder of Bike Club. We offer subscription kids bikes, where instead of buying a bike, you pay monthly and then you exchange as your children grow. We offer this in the UK. I'm based in London, and we also offer it in Germany as well, where we have an office in Berlin.
Great. What was your founding story like? If I understand well, it was started in 2016. So, but you were a CA at that point of time. You're working with one of the big fours. So, tell us about your founding story.
Yeah, it's the world's worst side hustle, founding a kids' bike rental business as a sort of side hustle to a KPMG job. So, like, I'm from financial services as a background. A lot of people in London are. And I was sent to one of the big banks in the UK, Lloyds Banking Group, and Lloyds couldn't grow its mortgage portfolio. So we were looking at ideas as to how to grow consumer finance, which sort of was the first time I really piqued my interest in consumer finance, how that industry works, and sort of the amazing things you can do for consumers using it. My brother's a conservation scientist, and we were talking about the circular economy and how we can improve sustainability in society. And that got me this idea of a bike club, where I was really into triathlon. I was going through that phase of my life, and I was thinking, why don't we lend people stuff rather than money? And we'll do it as a supercar club. We'll do it with bikes. And so, you'll be able to borrow the nicest tri bike or whatever you could think of. Problem is, it didn't really work. We never bought any bikes. It never really worked because people just want to own their passion products. So I was a bit sort of deflated, and I was like, oh, great, that's not worked. I was looking through the market research report and just realized how voluminous the kids' bike market is. And I didn't have any kids at the time, didn't understand anything about kids whatsoever. I now have 3, so I'm much more experienced with kids. And I was like, hold on, pay monthly kids' bikes, exchange as children grow. And that's sort of how it started. I was really into lean startup theory. I was a sort of, I was reading these books when I was not working, and that's kind of where I was. I was like, great, we're going to build an MVP. We use Squarespace to do that. I still remember the Squarespace app, notifications on my phone, and went off and sort of started trying to market this. And I mean, it was just this wild journey of sort of telling work, oh, can I just have a day off? Got a doctor's appointment or something? Whilst I was renting a van, loading it full of bikes, driving around southern England, delivering it to the first customers, meeting them, talking to them, understanding them. And, that was, I'm always a really big advocate for talking to your customers. I think everyone is. But actually getting out there, meeting them in their houses and dropping them off and just having a quick chat, that was super helpful and shaped the sort of product and the offering and the service that we were doing. Anyway, did that for a couple of years, and it was hell, right? Remortgaged their flats, maxed out credit cards, ran out of money constantly. But fundamentally, we were like a profitable business on paper. Actually, I think my highest net profit was £45,000, which is very exciting. But then, it sort of got to this point where, my mates, I remember one of my mates just turning to me and being like, look, he was my first business partner. He'd done quite well that year. And he basically goes, look, James, I'll give you 50 grand if you just shut up about Bike Club and get on with it. And so I was having my first child at the time, or we were having our first child at the time. I wasn't. That sounds strange. We were having our first child at the time. Sorry. I was able to take a period of paid paternity leave. And I did, I effectively used that to help raise the first seed round of the business. We brought in a guy called Mike Balfour. He was the founder of Fitness First. And he helped really educate me in everything you need to know about fundraising and building businesses. And, all of that sort of good stuff. Because I was incredibly green as a founder. I did not understand half of those things. And I think, again, I think I made every mistake you can make going through that process. And that's so it's sort of weird. So yeah, it founded in 2016, but I'd always say
Yep.
that, it kind of started really scaling in 2018. That's sort of when we really went for it, and it became a full-time thing.
Got it. Do you remember your first fundraise? What was the size of the round, and what was your story to investors at that time?
Yeah, I'd say so. I would say the first fundraise is probably the angel round, right? There's
Yeah.
friends and family and stuff, but that was all kind of done slightly. It was done in written terms, but no lawyer was involved, so it doesn't really
Mhm.
count. I think it's when you have a lawyer involved. And that first one, I mean, weirdly enough, I actually found the old investment deck the other day going through my drawers in my desk, and it's funny. The product hasn't changed that much,
Hmm.
and the business plan that we set out to do, it's still sort of the same business plan, right? It's just the
Okay.
timings have all gone all over the shop. We had COVID in the middle of it, if everyone remembers that.
Yeah.
And we've probably learned a lot more. And a few suppliers went bust, and a few suppliers didn't want to work with us, or a few did want to work with us. There's been a few changes, but the fundamental is it says pay monthly kids bikes. It changes as they grow,
Mhm. Mhm.
and that's sort of what we still do. The other funny thing, though, in that pitch was we were also considering doing subscription e-bikes, which reminds me of our friends at Dance. And I was
Yeah.
looking at that side of the paper. I was like, oh, wow, that's Dance. Yeah, look, I came up with their business idea, so I'm not looking at you, Christian. No, I jest. But
Yeah.
we found, certainly when we found, like going back to that first pitch, talking about kids'
Yeah.
bikes was just not cool, right? Like venture capitalists all wanted to talk about scooters, micromobility was all about e-bikes, all this sort of stuff, and saying kids' bikes was like people were like, I don't really want to hear it, basically. And so
Yeah.
that was a bit painful. But
Mhm.
weirdly enough, then you met the older investors who actually had kids or were at the other side of it, and they were like, that
They get
idea
it.
just
Yeah.
solves a huge problem in my life. I would love to have
Yeah.
this product. This feels like a real need. And so yeah, that's sort of how we began to build
Mhm.
traction there.
Uh,
Yeah.
What was your conviction at that time? If you look at the model of Dance or Swapfiets, it's pretty clear, what they are focusing on. But what was your conviction in this business model? Is it that kids are going to grow, they're going to keep replacing bikes, so it's a regular upgrade till they get to a stage, or is it that kids' bikes are maybe like cheaper? And what was your conviction in this specific business model, rather than just focusing on, for example, e-bikes like how Dance did it?
Yeah, like I'd say. So what do I like about it? There's a couple of sort of features I really like about the business model. So firstly, from a lending, if you put your fintech hat on, from a lending
Yeah,
perspective, it's really nice. So you're lending at basically the lowest level. You're lending at cost. You're buying the bike, and so
yeah,
you then get the retail margin, and then you get the finance margin. So actually, your margins as a sort of lending product are super cool, right? I really liked this, and I felt that the sell, because B2C is about scalability and go to market, and go to market doesn't really work unless you have a mass market proposition. So, and everyone needs a kid's bike, right? I think, well, the
hmm,
majority of us will buy a kid's bike in our lifetime if we have kids. So it felt like that sort of felt quite good there. And then the defensibility was that we can always beat another consumer finance provider because we're completely relaxed about that bike coming back to us because we have the platform to be able to access,
yeah,
to also to maximize the value out of that bike. And I was in our warehouse the other day, and we have serial numbers on all our bikes, and
hmm,
you can actually sort of, if you've been at a bike club a long time, you can guess how old a bike is by looking at that serial number. And I found one that was like 5-6 years old, and there it is, still going round. And there's loads
hmm,
of them. We have loads of these older bikes, but they don't look it. And that
okay,
was what's fantastic about Bike Club, is it does actually work really wonderfully from a circular economy perspective, in that we
hmm,
are sharing more assets, we're increasing utility, we're reducing waste. But from a commercial perspective as well, that's a bike I bought 5 years ago. Bike price inflation has been quite significant. So you can think about like the cost basis on that lend, that
yeah,
subscription is actually super profitable at that point.
hmm,
So that's so there's lots of little features I like about that. Also, like it's a low payment, which I now don't like, by the way, because it turns out you kind of want higher payments. But at the time, I thought that's cool because actually
hmm,
it's easy to sell someone a £15 a month payment or £10. It used
yeah,
to be £10 a month, £10 a month payment because they don't worry about it, and it's like it's easier. obviously, like as you get to know the business more, that means you've got to have loads and loads of customers, and we've
Yeah.
got 70,000 customers now, so we've got quite a few. But it does mean that if we sell 2,000 to 2,000 new memberships next month, it's Christmas, UK, that should be easy enough. Should be more. That's fine. That still doesn't turn that ARR needle that quickly. Although then it means that churn cuts the same way. So there's lots of things I like about it. There's things as you learn, you stop liking about it.
I think you also have something for £5 or something, right? £5 per month. I saw something on your
We do,
website.
yeah. So we
5 or
do
6
balance
pounds.
bikes. Yeah. So balance bikes you do, but I mean, I don't think anyone in the whole industry makes money on balance bikes. So yeah, they're a bit of a why do we do this again, guys? Although yeah, that's because you see the people who are making money, they're actually charging like 200 quid for a bike, and
Yeah.
that's no one really wants to pay 200 quid for a balance bike. We probably use this as a bit of a loss leader in some ways to get more customers in. All of my children have learned to ride on balance bikes. I'm a big proponent of the. So you're probably going into kids cycling here, so I'm going to bore you for 2 seconds. Back when we all learned how to ride a bike, we had stabilizers. Now, when you learn to ride a bike, you use a balance bike, and you use balance first, and then that's how you learn to get on your bike. So, yeah, we're big proponents of that at Bike Club.
Got it. So you're talking about circularity. So basically, you buy a brand new bike. The first subscriber for that bike gets a brand new one, and then maybe it comes back after 6 months, 1 year, and then if I understand well, you refurbish them, and then kind of like put that into the market again, right?
Yeah, that's exactly right. So you pay more for a new bike. So we do charge more. Yeah, that was a feature I learned when I was driving around delivering bikes myself, is that people were willing to pay more for a new bike than a used bike, or we call it refurbished bikes, rebikes is what we call them. And then we re-rent it, and then at some point you will sell that bike. But we don't, just to give you context, we've got about 70,000 bikes in the fleet, and I think we sold about 2,000 bikes last year. So we're not selling that many. We run for quite a long time. So that's sort of where we are.
So it's kind of similar to what the guys like Dot and Voy and Lime, they are doing as well. They have like big refurbishment facility where they refurbish bikes and scooters. They put that back into the market. So basically, you also have such a setup, I believe, right?
Yeah, that's right. So this is the other thing, which is kind of good because it's a nice competitive moat, but it's also kind of annoying because you've got to set it up and make it work. And we have made mistakes and we've made successes. We've done everything in those. But yes, we have refurbishment facilities in Berlin and in London, or in the UK, just outside London actually. And the UK one will do about 2,500 to 3,000 bikes a month or so, maybe a few more, depending on what you need. And Germany's a little bit smaller, so it's probably sort of going up to 1,500 to 2,000 a month. But that's sort of, yeah. So, and that's a big, if you're looking at your KPIs, that's a really big one for us. Is what is the production facility? How many bikes per mechanic? What's the, and we've had sort of generations of management come through the business, and I'd say that that's an area where there's still a lot of growth we can do there in terms of improving production speed. And it's interesting when I talk to my industry peers. It seems all of us are sort of focusing quite hard on like how do you make these production facilities work very efficiently. And it's key to the model.
Got it. In terms of what you actually offer your customers, so if you look at Dance or Swapfiets, what they offer is utility. Like, for example, Mark was on stage at Micromobility Europe. Christian was there as well. You were on stage, and Christian and Swap and Mark, they were talking about how fast they replace a bike. If something goes wrong, if there's a flat tire, they have to replace in a day, right? But in your case, it's a bit different. You're not offering utility. You're offering something else. Right. So it's not utility. Yeah, I certainly agree with that. Right, you don't need a bike club bike for you, but we offer hassle-free. So our best members, and we really are. As the business is growing now, we look to try and get the best members, not the sort of average members. And the best members are those who are time-poor parents who are quite income wealthy. Most of our members index well above the average for the countries we operate in. And they basically are busy parents who sort of go,
look, I just can't, doing the bike thing is kind of a frustration. I don't really want to start selling secondhand bikes on eBay because that's a hassle.
Yep.
We all know what that's like. But I do want to make sure we have the right size bike. And yeah, frankly, going off and spending 300, 400, 500 euros on a new bike for my kid is quite a lot of money. I'm not entirely sure they're going to like it. And I then feel like I've sort of got to use it all the time. So actually what I'm going to do is I'm going to take out a bike club subscription. And it might cost me 300, 400 euros over the lifetime. That's fine. But at least I've got that flexibility and that hassle's kind of gone away. So if you look at it, we've got really decent customer service, but you're right, it's slower. We used to have like super fast instant telephone lines a whole lot. And actually it didn't really change the CSAT when you just moved it back to a slightly slower. Is it slower? By slower, I mean, it's like 2 hours to get a response rather than like instantaneous on instant messenger. Because actually it's people aren't, because it's not utility, they're not so worried about that. We have a lot of high emotion though, because we're talking about parents and children, and a lot of our bikes are presents for birthdays or Christmas or something. And so you can't mess up the delivery of that. So we have a much more, I suppose, for sort of e-commerce, we have quite a lot further advanced tools like date pickers and stuff in the UX that we use to make sure that it all arrives on time.
Got it. So I don't have kids, so I don't know how often kids upgrade their bikes. So how often the kids upgrade their bikes?
Well, that's a good question. So it depends.
Well, where does it start? At what age will they buy their first bike? And
okay, Prabin, let's take you through that. Go on. Right, so look, so you can get a kid on a balance bike from the moment they can walk, right? But that doesn't quite work because their motor function is not that strong. So usually it's sort of starting at 2 to 3, they'll start getting onto balance bikes. Then if your kid can talk well, then you can probably start teaching them to pedal. But if they're not quite so communicative, then you probably start to teach to pedal at like 3, 4. So like my kids have learned between the ages of 3 and 4, right? And then they will start pedaling very proficiently by 5, and then 6, 7, you can move them onto geared bikes. And then so in terms of sort of moving them through, like a balance bike, you can sit on a balance bike for 12 months, 18 months, right, before it actually breaks through. And the key we find, right, as I've effectively helped 70,000 kids learn to ride a bike, right? The key is to not push them. It's to, and this is going to sound very good from a person who wants you to hold onto your bikes for a long time, but I promise you this is true, right? If you get a balance bike, you just leave it in the room with your kid, and eventually they take an interest in it, right? And then that's the point when you go, let's go for a bike ride, and then you can help get on it. And then the same with the pedal bike, right? Getting them on a pedal bike, you shouldn't be teaching them to ride a pedal bike for longer than 5 minutes at the start, because they get very bored very quickly. But you do it over time, and then it just clicks. It's like riding a bike, and then hey presto. So on that sort of side of things, though, right, your averages on a balance bike can be quite long, but a first pedal bike can be quite short, so it can be less than a year. And then on a bigger bike, it's 12 to 18 months to 24 months. That's sort of how long I'm holding on to it for. So on average, people exchange their bike every 14 months, if you wanted sort of the headline number for us.
Okay, and so you said balance bikes so early, and what's the age group like? I mean, what's the age limit like? If you look at your oldest end user,
what is the old? Yeah, so this is something we've just started piloting. So we started working with Trek bikes now, who are like. When I was starting the business, I was like, that's a dream working with Trek bikes, and now we are. It's very exciting. It's a real pinch yourself moment. And so we have started offering some of their mountain bikes at the bigger end, which means that we can get into the tween market, the early teenage market. But generally our eldest sort of gets to 10, 11, and that's 10, 11, 12, and that's sort of where Bike Club kind of taps out. But that is an area of growth for us at the moment, is pushing upwards. The pay monthly and exchange as you grow product doesn't work quite so well in those cohorts. So it's a slightly more conventional retail, let's say that way inclined at the minute.
Got it. So if you take a typical end user, which is an infant kid, so it's about 10, 11 years that you have where the parents would pay for that, right?
I think it's probably more like it's more like 6, 7 when you boil it down, right?
Okay. Got it.
But if you look at so just sort of give you an idea on a net dollar retention basis, after 4 years, you're still at 50% for the cohorts. So I could try and argue it's 8 years. And if I was on an investor pitch, I might try and do that. But yeah, I'm not old enough to be able to prove it yet. So, well, the data's pretty thin. That's older than that. So yeah,
Okay.
but we're seeing, so it's really, it is interesting. You do see, what we found is that, as we've grown up, we've got better at our data, right? As a business, and we're much more mature now and have much greater grasp. And one of the things that's come through is, and it's so obvious this, but the product for us is exchange as they grow, right?
Yeah.
And once someone starts exchanging as they grow, they stay with Bike Club for 3-4 times as long. And it's really obvious, I know, but it's not like I've not just given you a revelation, but exchanges cost you money as a business because the bike comes back, gets refurbished, and goes back out again. So that's a servicing cost for us. But actually, you want your members to exchange on a regular basis, and then they're using the service and then move forwards. And the same thing we discussed it at the panel at Micromobility Industries. Both Dance and Swapfiets, they want you to use the breakdown service because then you feel it's worth it. It's a good thing. And for us, we want you to exchange. And so we do encourage you to exchange and try and be your partner through the hassle-free kids bike journey. That's sort of what we're trying to do.
Got it. But the exchange point is also a churn point as well, right? I mean, you might lose customers at that churn point. Sorry, at the exchange point as well, right? At the upgrade point.
Yes, you do if you don't have the right size bike. That's a nightmare.
Yeah.
Trying to fit your stock level. We have a much more complicated merchandising requirement or fleet management requirement than what I'd say is like an e-bike subscription business. But yeah, that's what happens there. I mean, churn can, there's a lot of seasonal churn, which everyone experiences. We're probably less pronounced than perhaps other models, but you still see it this time of year in the UK. You get the sort of post-summer churn. But then you also get, the other sort of churn is like grandparents buying someone a bike. Bloody grandparents, that's always those competitors. Yes, no, I shouldn't say that. They're lovely. And then you also get so you get that, and then you also get sort of loss of interest and that kind of thing, which I think as kids get older they can lose interest in bikes, and so we try and combat that with content. But ultimately, it's slightly why Bike Club exists, is to give you that flexibility, and that's sort of why you joined. So that's why we're doing it.
So, if you look at the numbers of Swapfiets, I mean, Mark is doing an incredible job turning around the company. And one metric that's very interesting, I mean, I'll try to put the chart for YouTube listeners, is that the revenue per member, it's been consistently growing from 2018. So just for you to know, I think in 2018 for Swapfiets, it was close to 90 euros per user. And in 2024, it's 341 euros per user, right? Wow. So it's been like, it's massive gain. Your revenue per user, is it comparable to this or much lower, or do you benchmark to what Swapfiets is doing? Or
no, we don't. No, we don't look at. I mean, I'm not barely even familiar with what their prices are, to be honest with you. Okay. I suppose they've got no, but just because it's different market, we benchmark to kids' bike prices, and that's sort of where we are. But I don't think you're not looking at Swapfiets and Bike Club, right? It's two different services. Yeah. But no, so we benchmark through to the cost of the bike and what the total cost is to us, and that's how we set our prices. We have driven through. We are generally increasing prices by about 7.5% a year, but a lot of that is inflationary increases. In terms of like revenue per user, not going to be the same as Swapfiets. That's extraordinary, but I imagine that's a lot of that to do with the electrification of the fleet and where that is. But that's also not taking that away from Mark. That's brilliant. He's done very, very well there. But for us, we certainly. We probably were around £90 a user in 2018, and we're close to like £144, £150 a user at the moment. So
I think probably the right metric if you want to really compare, maybe the right metric would be revenue per member, and comparing that with the actual value of the bike, and make a comparison. Right.
Yeah, that's probably right. I mean, I was thinking yield is quite like yield, because one of the things we're trying. I think Mark is doing the same thing. Is basically, we did a restructuring last year. It was painful. a lot of us in the industry have done it.
Mhm.
We said goodbye to colleagues and we missed them. And it was a challenging period of time for business. But that put us like on a much firmer track to EBITDA profitability. Last 12 months, I think I should be posting about €1 million EBITDA. This is on an adjusted basis, which
Yeah.
Mark, by the way, from Swapfiets always tells me off for, but I'm going to keep as an adjusted basis. So I'm going to stick by that. As an Anglo-Saxon, I will stick by my adjusted numbers. I'm sure on an unadjusted basis, it's probably not quite so good, but let's not
Okay.
dwell on that, Prabin. But look, so it's on a continuing operations adjusted basis, it's that much, right? And
Okay.
that's pretty good. That's a massive change. We were talking about this. We've talked about this previously. We were
Yeah.
heavily loss making, like a lot of these businesses, and we've now done a huge turnaround and pushed that forward. So that's really exciting. The next stage is EBIT profitability. And I think we're going to go through a bit of a growth period again. So we're getting back onto a growth footing for next spring. And so then EBIT profitability will probably be 27. And then by the sort of back end of 27, we should be at the point where operating cash flows covers bike capex.
Mhm.
And that's that sort of cash flow break even point, which is what we think is a key moment to
Yeah.
unlocking equity value in the business. So we think that's a once you start showing that we actually can be cash generative and fund the bikes, and then we can kind of just keep growing in perpetuity. That's a very exciting place. What we've learned through going on that journey is, I was a very hard charging, ambitious founder who sort of looked up to the likes of Travis Kalanick, Uber, all these sort of types of people, right? And I was like, yes, we've got to scale as fast as possible. And so, we pushed really hard and had a lot of success and, scaled the business really well. But actually what I completely sort of overlooked was actually in this business, it's about cash yield, quality of members, and it's about growing at a sustainable rate. And that's actually much more valuable than growing at a super fast rate. And so we've gone through that sort of cycle of maturity and now really seek to grow with the best members we can. We use limited levels of offers and discounts. I used to use that the whole time whilst trading. Now it's much more about managing conversion rates and making sure we're managing traffic to the site and ensuring that we're getting the cheapest and leanest and best traffic we can. And then ensuring that that we're keeping the prices at the right level, make sure we keep maintaining NPS at the right level, CSAT at the right level, and growing at a rate that is sustainable and isn't distressing your balance sheet too much. And that means looking at your cash yields on sort of bike capex, etc., and ensuring that you're getting those really healthy unit economics coming out from underneath. That's sort of how we're focusing now.
Yeah, I think you're being modest in terms of your growth. I believe you grew 70-80% last year or even more. And I think the year before it was 52%. So you are growing pretty consistently,
Yeah.
right?
Well,
pretty good numbers.
That's what I mean. Like we were doing that, but it was just that when you start going past, I think when you go past 40% of this business, I think that's when it starts getting quite like the business starts shaking and it starts not quite as exciting as. Yeah, it gets harder, I think, for us. Whereas I think like now we're targeting 25-30% growth, and actually that's this year's been this consolidation year, restructuring year, and I think we're probably going to come in at about 10% revenue growth this year or so. So it's not these are numbers which you haven't seen yet because I'm talking about the next year after. Sorry. When we say I'm always thinking of the financial model, not the financial statements. So that's sort of where I am. So it's been an interesting period of time and probably quite a good period of time for Bike Club. In fact, in going through this quite challenging time.
You were pretty good in raising funds as well. So if I understand well, it's almost about $70 million USD that was raised over right from founding. Can you tell me about your fundraising journey? How easy it was and how it is right now?
Yeah, that's a good question. I mean, like, it's never been easy. Because we all sort of, as far as I told the guys at Dance the other day, it's like, I remember the good old days, and we're like, hold on, were they that good? I don't know. So it's never been that easy raising money.
Not even the ZERP times, zero interest policy
Well,
times.
I know I think it was easier then. There was more competition. But getting a deal over the line is always an effort. So we've raised from Codex Capital, from Circularity Capital, and along the side we brought in Triple Point, the UK based business, not the US one, who's done our debt funding. And they've been amazing stakeholders of the business, very, very supportive. You go, I think they've all understood that the business is not on a non-linear journey to success, and I think but they also all believe we're on a journey to success, and they've supported us through our ups and downs. And to me, that's been hugely worthwhile for us as a business. It's meant we've been able to, we've been able to get through. Well, we've been able to grow through the COVID boom and bust in the bike industry, which has been really, I'm really proud of the team and what we've done here to get through that.
Yeah.
That was a very challenging period of time for us. But yeah, it's sort of, I suppose, the bit that the sort of the next stage of the journey is proving out the economics so that you can do what these guys that you're seeing, the bigger boys at Voy and are doing, which is much more institutional funding that creates a more stable funding base underneath the business. Because at the moment we're still, we got about 30 million euros of total contract value. This is like our receivable, if you like. If you looked at all the contracts and all value of the contracts in the business, which is good, but it's not really big enough to sort of attract like the institutional funding.
Yeah.
So we need to sort of prove those data points out, and then we can hopefully do some more interesting fundraising there. So currently for us, we're lucky, as I say, the stakeholders are supportive of us. So we've been able to sort of continue with doing an incremental fundraising with those guys at the moment, which has been really, really helpful.
Got it. So along the journey, you expanded out of UK. You have Germany as a growing market right now. You also ventured into Spain, and you acquired a company in 2023, and in 2024 you kind of shut down the Spain business completely, right? Can you walk me through that journey? Why did you get into Spain, and why did you decide to exit?
Yeah, well, so why Spain there's a couple of reasons there, but let's just start. Why international in the first place? Why, because we're relatively young to be going international, and so it's like, why do you want to do that? Well, the UK bike market is like it's the sick man of Europe compared to the rest of the European or the Central European bike market. It's not. It's nowhere near as strong. We just don't have the players here, and 50% of it's run by one business, Halfords. So it's quite an interesting space to be in. Whereas you look at the success that, or at least I was looking at the success Swapfiets were having in Germany, and I was thinking, wow, that could be a really good place for bike club to go. And then on top of that, you were going, well, actually, a kids' bike purchase is a sort of once every 18 months type purchase to a family. So you've got to be slightly cautious on how fast you can grow this type of business. And so this is where the strategy of let's increase our TAM coverage, and that will then increase our sales. So it means that we can go for more cheaper sales rather than having to go for the more expensive sales in the UK. And so that's how we ended up launching in Germany. And that was really funny because we sort of started and we were like, wow, God, the CPAs are super high. This isn't working. And then spring, and then sort of the first buds of spring came, and suddenly it was like, oh yeah, this is working. This is working really, really well. Oh, we now need more bikes in Germany. Oh, we've quadrupled our targets, sort of thing. And it just went crazy. And actually, we've had real problem sourcing in Germany, and it's in it. My poor country manager is sort of running around trying to find bikes to service our members with. And but yeah, that was super exciting. And then in Spain, I remember this MBA student reached out to me years ago and was like, hey, I'm looking at your business and want to do my final project on it. And I was like, oh yeah, of course, that sounds really nice. And we stayed in touch. And then after his MBA, he was like, hey, I'm actually set this business up. Just want to let you know. And I was like, oh, hey, I'm in Barcelona for my brother's 40th, I think it was, or something like that. Should we meet up? And I was like, oh yeah, that'd be great. Okay. So we met up with him. And his project was super small at the time, but he knew what he was talking about, and it was like, okay, well, why don't we try and do this together rather than you trying to raise money in Barcelona and trying to make this work. And so we did some market validation testing. It was a really good example of where potentially lean startup theory is better than just doing market research.
Yeah.
And so we did all that, and the surveys we used for Germany, we adjusted them stuff we learned from Germany. We just did it in Spain. We use the Attest platform. I always feel I should plug Attest. I don't know the guys who run it, but it's a brilliant market research platform. And we're using that. And actually, it came out as a higher propensity for Bike Club to work than Germany. And we were like, wow, this is going to be amazing. This is going to go really, 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 really well. Let's give this a go. And obviously, we then sort of went into the market, and our marketing strategy is usually some kind of awareness marketing, like 80 above the line marketing, and then digital marketing for activation. And we did all that on quite a low level, but we did that. And we were driving tons of traffic to the website. And we're like, look at this. This is all going to start converting, isn't it? When's it going to start converting? Why is the conversion rate 0.05% type thing? And poor old Gabriel, he's a fantastic country manager. He spent about, I say pulling his hair out, but the guy's bald, so whatever. But he spent like 3 months. He spent 3 months sort of trying to work this out and sort of interviewing members, talking to them all, and you know, we had members joining us, but the CPAs were just too high. And so in the end, we all went down to this bike show in Valencia, and and we just sat down and spoke to members just face to face. And like in Valencia, they speak pretty good English, so I was able to sort of do it myself as well, which you know, when you're making that kind of decision, you want to get comfortable. And I think what became clear was that the piece we overlooked was that the average household income in Germany was 49,000 euros. In the UK, it's 45,000 euros. It's very comparable in terms of household income. Whilst in Spain, it was 22,000 euros or 23,000 euros. So it's almost half. And so that's sort of when we worked out, and these interviews we're doing with these customers, that actually they weren't quite so willing to spend that much on a kid's bike. And so fundamentally, our membership base was kind of expats, whether they're from Germany or from the UK. It was slightly interesting how our membership base actually spoke a lot of English, not Spanish there. So we're like, oh, actually, this is probably not working for the Spanish market. And yeah, I think, and so, you know, we sort of all looked at each other and said, I think this has got to get shut down at this point. And the team took it so well. They all sort of helped us wind the whole thing up. And yeah, so we've sort of wound up our ongoing operation in Spain, which I'm very disappointed about, but it was a good, but we were quite disciplined in terms of, is this working or is this not working? We didn't just keep pushing on. Do I think we could have made it work? Yeah, you probably could pivot. Someone out there will make it work, but it wasn't us. So yeah, so we're not going to be doing it.
In terms of expansion, is it like Swapfiets Dance where you have to go city by city, or you can just go country?
No, we just do country because we deliver. So this is a big difference. And it'll be interesting to see if, I know Swapfiets sort of talk about it, so I probably shouldn't be saying this because I'm not sort of this employee, but like they sort of talk about, should we be doing this remotely? And we because remember, we remotely deliver our bikes and then we collect our bikes on the doorstep. I mean, I love the Swapfiets Dance model of doing it centrally and delivering it. I think that's really, or, you know, doing it yourself, I think that's really good. But for kids' bikes, it doesn't quite work. We have much lower concentrations of members, much lower concentrations of members. We've tried our own van in London, and it just doesn't work.
Yeah.
Turns out being a logistics business is really hard, and that's a whole skill. So yeah, that's not something we're going back into. And so yeah, we tend to just do the whole country, and then from a marketing strategy, we do. Sometimes we sort of have moved to the idea of targeted areas. We've tried it in the UK. It works a bit. It really depends on like the quality of the media you're buying and the quality of the advertising you're using. I mean, marketing strategy is with AI is it seems like it's changing everything at the moment. So
yeah,
I don't even want to comment on what we're going to do in 26. I think we're all slightly sort of, well, yeah, we're going to try a few things, but we'll see. Hopefully they work. Things like performance marketing just seems to be performing in a different way than it used to in many ways.
So if you're looking country by country, so you have Germany, UK, why not Netherlands? I mean, you know, when you look at the bike population, I would think that, you know, Netherlands would be a straightforward choice. Well, why not Netherlands?
You'd thought so, but there's only 17 million of them, and there's 85 million Germans, and there's 10 million. We also do Austria as well, and there's 10 million Austrians. So you get nearly 100 million consumers versus effectively 27 million if you include Flanders as well, consumers. So You're right. I think Netherlands is a good option, and I think I'm officially a director of a Dutch entity because we nearly launched in the Netherlands, and we didn't do that because we needed to sort of restructure and take a bit of a
Yeah.
pause. But the Netherlands is on the list of places to open in. But I think the only thing I worry about in the Netherlands is that they actually use their bikes a lot, and so I think we need to think about bike design. Whereas in the UK and Germany, kids do use their bikes, but they are using them more for leisure rather than actually cycling to school. Whereas you go to the Netherlands and you see every kid in
Yeah.
Amsterdam cycling to school on their bike. And the weird thing is when we're doing the Dutch side of things is they do have a different taste in bikes. I know it's obvious. They have the Dutch bike, right? And that's it. But they love the Dutch bike. The Dutch love their bikes. Whereas in the UK, we're like, why a Dutch bike? Like we don't care. And so it's slightly so we need to buy a new fleet, and we don't have the supply chain for that right now. So which is all solvable. It's not; these aren't impossible things to get overcome, but it's just they're quite involved as a market. And I mean this kindly to our Dutch friends. It's a smaller market than Germany, so yeah, we wanted to focus on Germany first.
Got it. I don't know if you have enough data right now, but then you mentioned that you capture a certain part of a kid's life, right? I mean, till early teens, maybe. Did you ever think that you could actually push that boundary and maybe step into the dance Swapfiets territory? Given that they grow up knowing about bike club, probably listening.
Yeah. Well, I think this is this whole sort of thing I was saying at the Micromobility conference about consolidation, right? And we can come back to that. But I think, there's definitely a gap, though, right, between where we probably end, which is like 12, 13, and where dance probably starts, which is like 21, right? Or Swapfiets starts sort of around, or 18, like when they go into university. There's probably like a few years gap. But for us, like I think, we've always kind of been reasonably capital constrained. We know our margins and we know our product on the kids' bikes. And that's sort of why we've kind of boxed, that in. If you put a perimeter around it, stayed there. And also when you're explaining it to debt providers and explaining it to equity investors, it's kind of easier to say that this is what it is, as opposed to there's some revenue from here, revenue from here. The thing we do have what I suppose we call speciality bikes or like BMXs and mountain bikes and that sort of stuff. We do have those in the fleet. They're quite interesting profiles, and they can do quite well for us when done properly. We tried scooters as well, as in like kids push scooters. It does not work. That didn't work well at all. Too low priced, and just a bit of a nightmare. So yeah.
So where do you see the growth coming from? So geographic expansion is a no-brainer, but then how do you grow beyond what you have right now?
Well, I mean, look at the moment, our market penetration is super low, right?
Yeah.
Even at, you look at, I think Voom are doing like 150,000 kids bikes a year in Germany, and the big boys in the UK, Frog, we used to be doing 45,000 in the UK, and I think Isla were doing 20,000. So you can see, like, so the lightweight, the sort of premium kids bike category. I mean, we've got a lot of room for space in our existing markets right now to grow, and I think we need to focus on that, and that's where we should be growing. That's what we should be doing. I don't think we should be looking at further international expansion for the time being. I think that's that's those. I don't think we get any value for money for investors at that point. I think it's about sticking to where we are and making that all work really, really well for us.
How's your relationship with all the bike manufacturers in the space? Because what you're essentially doing is like eating into their sales, right? In a way.
You don't play to their insecurities, Prabin. Don't do that for me. No, let's say I don't think that's fair, right? Because this is the thing. You're probably making it sound like the manufacturers are all servicing the same customers. Remember, we're probably we're making premium kids bikes more accessible, right?
Yeah.
And making that more relevant to people. People like Frog and Voom, their sort of struggle is not necessarily persuading people not to subscribe but to buy. It's more actually persuading people to go into the whole premium kids bike category, full stop. They're still not the biggest volume kids bike manufacturers in their markets. Those are the smaller, cheaper ones that you can buy from less reputable retailers, we should talk about. So So I think we offer an additional route to market for them, and I don't think it can be proven that we are cannibalizing their existing sales. So I think
Got
that's
it.
not fair. And we, there's one manufacturer who did try to stop us in the UK, and they tried to sort of throttle supply and tried to sort of control the market. And I think as any of us who studied any amount of economics knows, that doesn't really work.
Yeah.
And what happened was we ended up going with another supplier, and that supplier has had a really difficult time with it. And it's not because we really liked working with them, but they throttled our supplies. So we had to go and find a new manufacturer, and we did that. And instead our sales just grew, and theirs just became a smaller portion of them. And that's sort of what happens, right?
Mhm.
We have our own brand, which is Form, that was bought off a manufacturer that went bust.
Okay.
So it's never really our intention, but we did that.
Mhm.
And we like offering other people's brands, but we also like having our own brand as well, which gives us security in that. But we can be really, really good friends with our suppliers, and we can really
Mhm.
help them grow and
Yeah.
generate further revenue.
Your customers are brand conscious. Brand conscious
Uh,
meaning, do they look for a specific brand when they go through the catalog, or they don't care?
no, they're often brand conscious on the way in. On the way
Yeah.
out, they might not be quite so brand conscious. So yes, just half them aren't,
Mhm.
right? So I've always been quite fascinated by that. When you do the custom surveys and focus groups and that sort of thing, you talk to them, and it does break down. Some are like really into what brand they want, and others are just like, it's a bike. Is it a good one, or is it not a
Mhm.
good one? So yeah, that's sort of that one. I mean, for us, it's tricky because you go, well, if they don't really care what type of bike it is, why don't we just offer them a cheaper bike? But the problem with doing that is it's low quality, and then you can't re-rent it, and then
Yeah.
yeah, and then. So for us, we've always got to use high quality bikes. That's kind of drives part of the cost base in us.
So if they're not brand conscious, so then at a certain scale, it maybe makes sense for you to build your own bikes, right? I mean, of course, you said you own a brand already, right? But then it makes sense to build your own bikes, right?
Well, that's what we do, right? So we
Yeah.
bike industries, like a lot of this built by certain factories. The kids' bike factories, there's a few of them around. The one which we use is shared by two of our other brands. So when
Mhm.
you go visit them, you can see our bikes coming out alongside the other brands' bikes coming out as well at the same time. You're like, oh, that's interesting. Why don't we just put them all in one container and send them straight to us rather than us buying them off them over there? And that's what we do, right? We
Yeah.
literally we this again, which is why like suppliers can quite like us, because we can be quite a low fidelity client, right?
Mhm.
We can be like, look, we've got supply chain teams, and they can deal directly with your manufacturer, and we can just effectively license the bike off you, and we
Yeah.
don't mind doing that. And here's some heads of terms we'll sign, and we'll try and move that forwards.
Got it. Are you happy with where you are today in terms of where the company is? I know that you went through a restructuring and all that. Are you happy with where you are today, looking back to the 2016 pitch deck and the thesis that you had then?
Yeah, I've, as I say, I think I'm a first time founder. I think I've made every mistake there is in the book.
Yeah.
Maybe not. I don't know. But
Mhm.
yes, I'm happy because, we're still in the game, and we're still moving forwards, and we've
Mhm.
definitely built a business that customers value. So
Yeah.
that's all pretty good. In terms of sort of where I'd have liked to have been further down the road to profitability than we are
Mhm.
today. And I wish, if I was going back, I think we were too profligate or too ambitious in our growth. I mean, I found a
Mhm.
deck the other day. I shouldn't admit this on a podcast, but I found a deck the other day about making Bike Club a unicorn. And I was like, gosh, who wrote this, Tosh? And it was me, right? Just like, why would I write this stuff? Like, whereas realistically, you're like, God, this isn't what we should be focusing on. So yeah, I think I think if knowing what I know now, like
Mhm.
yeah, I'm happy with where we've got to and what we've achieved, but do I think there's so much more that could be done in this business? And the future feels pretty bright, but it
Mhm.
doesn't. But it feels like a different future to the one I probably set out to do. And I think that's kind of expected, right? Because
Mhm.
if I think that there is a higher instances in first time founders creating unicorns, isn't there, than second time
Yeah.
founders? I think because the second time founders are slightly sort of it's like drier and like let's focus on profitability and make this thing work and not get Whereas I think I was very much that kind of full of exuberance. But now we're now much more mature, much more focused on what really matters in the business.
But I think that the market is like pretty big. That there's space for a unicorn, right? Or
well, is there space for a unicorn? I don't want to talk Bike Club out of this. But I think I seriously, I as I sort of said, I mean, now we're getting to it. Like, I think consolidation. This industry is it's a wonderful industry that's existed because of Web 2.0 type technology, which I no longer gets excited about now. But the way that we can connect people online means that we can use those tools to create better distance rental businesses, and that means that we could build the circular economy, and that's super exciting to me. But if you looked at if you spend time with Swapfiets or Dance or any of them, we have quite similar team structures, and actually you do feel that if you start putting these businesses together onto one platform, one balance sheet, you could build quite an interesting and quite easy to understand business, and I think that could be quite compelling. And that does start to feel like that $1 billion market capitalization could stem from that over time. I think I think as a concept, Bike Club is very much way beyond proving product market fit and profitability and all that. So that's great. And I think it's now about how do you scale it sensibly and get it to where it sort of deserves to be.
Sure. But you really think that there's synergies with say what Swapfiets does or what Dance does?
Yeah, there are, but it's not. But I think it's not. It's probably would take twice as long and cost twice as much to realise than how I could probably say on a podcast. To be clear, there's the obvious synergies. You wouldn't need two CEOs. Let's just start with that. I talk about that myself. Yeah, see you later, Mark. No, that's a joke. That's a complete joke. He's much more serious to me. And so but you wouldn't. But there's that. But there's also things like the refurbishment, right? Putting a Bike Club refurbishment line down at the Swapfiets refurbishment center initially would be hell, right? They've got ours is I'm pretty proud of ours. Theirs is next level, right? You went to see their sign in Berlin. It's super cool. But the thing is, you'd have to calibrate that. But if you calibrated it and you use sort of lean methodology, you could probably make that work really well. And then you actually could have quite industrial sized refurbishment centers, and that could be really exciting. Customer service, that we are just talking about bikes here. And I know kids' bikes may be a slightly different shape to an adult bike, but e-bikes are slightly more complicated. But that could also, again, you can see the customer service team could be super high quality and offer really high satisfaction levels to people. And there's all the obvious ones like finance and marketing, all those sort of those pieces. So you can see how it could really work. It wouldn't be like you saw it in remember like the Kazoo motorway days when those guys were growing really fast and they started buying subscription car companies and putting them on the side. It's not like that. I think it's actually much more like it's much more of a clean merger, I'd say.
Cool. I think from a revenue versus generally looking at your cost structure and all that, I think you're way leaner compared to where Swapfiets was around the same revenue numbers that you have right now.
That's cool. I think that's probably I think that's nice. Thank you. I think that's probably fair. But I think also Swapfiets, they sit in a giant. I'm not. Yeah. They sit in a giant group that has an amazing balance sheet, so they're very lucky in that. But it means that they, if you're looking at threats in your market, going on to the SWOT analysis again, that's quite threatening to the subscription bike industry. Is that Swapfiets, they can kind of do anything if they really want it. They really put their mind to it. Now I know that they've got their own strategy and they're pushing forwards for profitability, and it's really good because I think we also, by the way, to be clear, we all look at Swapfiets' financials and go, can they please be profitable? Because the moment that they're profitable, you get to go to your investors and go, see, subscription bikes can be profitable. Look what Mark did. It's great. We're going to do the same thing. And so it's not like and it's the same for Dance as well. I want those guys to do super well. Because the better we all do, the more the higher the multiples are going to be,
Yeah.
and the better exits we're all going to see, and et cetera, et cetera. Because realistically, we're not really competing that much against each other. In fact, certainly in ours, I don't feel we compete at all against Swapfiets. So we do want it to work out. But yeah, I'd say we are pretty lean. I think that comes from being dare I say, an independent, but we're not really an independent. We're owned by private equity. So, but we're a standalone business. We're not, we are just a subscription kids bike business. That's all we do.
Yeah.
I'd say that's sort of perhaps why we've had to be quite lean in this business.
Yeah, I mean, if you look at what Swapfiets has done, so if you look at a couple of years ago, I was very critical about subscription business because it did not make much sense, from a math point of view. But then, what Mark has done the last couple of years, I think it has given a sense of confidence, a sense of optimism for the entire industry. Right.
Yeah, I still think I agree with that, but I still think people would like us to get to profitability a bit faster. In fact, I certainly point to a few of my board members on that front. So yeah, there's people in the room. So yeah, I think we are. I think we're all trying to get there as quickly as possible. But I think as managers and operators know, the getting to profitability, it's not a sort of click your fingers and it's all kind of done. It's hard yards. Sustained profitability, and I think I'm very confident Bike Club is on that journey right now. The numbers are all going in the right direction, which is good. But yeah, I as I say, I think if I was going to regret one thing, I wish we'd gone on that journey sooner rather than later.
Yeah. You've been having an incredible journey the last couple of years. The growth is great. I mean, you said you're EBITDA positive, close to being a bit positive in the next years as well. What's your style of running a company? A year ago, founder mode was very popular as a term. Are you so involved in the business, or what's your style of management? Is it you delegate it completely, or you're really involved in everything that goes on in the company?
Yeah, no, I'm much more of a delegator than I am.
Okay.
Yeah, so I was trying to think. I'm not really founder mode. I grew up in a professional industry, and I'm probably too long at KPMG or whatever doing that sort of stuff. And I've done various things in my career that probably mean that I'm slightly more structured than unstructured, I'd say. I suppose I like the role of CEO. I enjoy the management, the leadership, the people I work with. I very much believe in the phrase, if you don't need to bark if you bought a dog, or whatever the phrase is, if you see what I mean. And I think you just got to have to let people get on with it. Yeah. I think in the past I've perhaps let them get on with it too much, and so I probably have slightly more structured management. But for us, I mean, I start every meeting with a reaffirmation of what our vision is, and then what our objectives are for that half. And then we go into sort of performance and where things are, and then we discuss, and then we move into sort of the business topics and that side of things. I think people get kind of a bit bored of it, but what I found is initially when we did our funding around with circularity, we had tons of cash and we were sort of running around chasing stuff, and actually we just completely blew out our bandwidth. And in fact, what we needed to do was stick to a set of objectives and then remind people what those objectives are, because that's effectively reminding people what success looks like for us. I'm controversial here. I'm not a big fan of objectives and key results. I think key results you spend far too long getting into what is a key result, and sort of calibrating that. So I do something which I borrowed off Alistair Campbell. He's a British spin doctor from the new Labour government, which is the objectives, strategy, tactics. And so we tend to have a set of strategies that the department heads or the objective owners are running, and then tactics is kind of what we're doing day to day to try and execute those strategies. That's sort of how it works. And in fact, I'm currently going through a new objective cycle at the moment. So we are, yes, that's the fun stuff I'm on at the minute. So it sounds a bit dry, but it's not. I think that being too founder mode or whatever, it can be. Yeah, we do hustle a lot, and I'm not afraid of having difficult conversations with landlords or whatever it is needed to keep things moving forwards. But yeah, I tend to try and keep things quite sort of dull, professional.
Got it. So can you paint a picture for about the future, the future vision that you have for Bike Club? Where is the company going? What's your future vision? Like, what's an ideal scenario? Maybe even if it's not being a unicorn, what's your
Yeah, I mean,
what's
look,
your
I think we want to prove profitability. So we've got
yeah
our new business plan is very much focused on sensible growth levels. In the UK and Germany, growing at quite a healthy rate, but not too healthy a rate. And that's driven through fairly standard marketing tactics. No sort of big brand campaigns or anything along those lines. So that keeps your CPA nice and light. And then you drive the growth through to get to scale. So really the key number we're trying to get to is 100,000 members. And so we're at 70,000 now. So it's about getting past 100,000. And
yeah
then the CFO wants us to get to 120,000 because that means that your cash flows from your bike, your operating cash flows are actually not just covering your bike capex, also covering your interest payments as well. So I say the plan is to get to 100,000 members by the end of 2027. He says plan is to get to 120,000 by the end of 2028. So that's sort of the argument we have at the moment, and that's
Mhm.
where it is. I think for me, I want to see that plan go through in whatever role. But I think realistically, I don't know. I'm a youngish guy. I've got quite a few grey hairs, right? So I wouldn't say bike club is my sort of be all and end all, right? I'd love to
Okay.
sort of, I'd say we're looking at exits on the horizon.
Okay.
And so that's what we're building towards at this point.
Got it. Thank you so much for the very honest conversation. A couple of months ago, I believe, or maybe a year ago, I was talking to Mark and he mentioned about Bike Club. And I wasn't paying a lot of attention to Bike Club. I did hear the name, pop up often, but it was an absolute pleasure getting to know you and the company. And you've been doing an incredible job. And for me personally, being part of the industry, companies like yours uh, give us hope, give us optimism. So thank you so much for all the good work that you do. And thank you so much for coming on the pod.
Yeah, thanks, Prabin. I mean, I love what you guys are doing at Micromobility Industries. It's the conference last year was fantastic. It was really fun getting to see peers and it was just amazing because that actually felt like our tribe, right? We go to
Yeah.
these bike shows and you're like, I'm not sure, you don't quite fit in. And then you go to this one and suddenly we're talking about all the same stuff and,
Yeah.
having great fun and just comparing notes. And you organised a great thing. And I strongly recommend all listeners to go to it next year in Berlin. It should be
Thank you.
a huge amount of fun. So yeah. It's really
The
good.
panel was incredible as well. So for listeners, the panel with you, the CEO of Swapfiets, Mark, and Christian from Dance. It was an incredible panel. Anybody interested in understanding what a subscription business is and why we should be positive about it, go listen to it. Or it's live on YouTube. But thank you so much, James. Thank you so much for coming on the pod.
Thanks very much. Thanks. Bye then.